I want to talk about China.
Sure.
Has China done enough to restore investor confidence, especially foreign investors?
In a word, no. I think what we're seeing in China is a whole framework that is in flux. The policy framework, the leadership framework, the management of monetary policy, the management of fiscal policy, all of that is in flux. And so the playbook for investors is in transition, and we're still trying to figure out how it looks like through this flux. And I think the challenge for us, as with many others, is this phase could be extended because there are a lot of moving parts. They're trying to shift the economy away from reliance on real estate. There are external considerations, including geopolitics. So there's a lot of moving parts, which is tricky for us.
But to be sure, it is the second largest economy. We talk about a slowing down of growth, but it is still at least 4%, which is respectable for most people. I mean, if you take a longer term perspective, surely there are bargains.
There are bargains, which is reassuring about China. And what's interesting about China,
where?
Well, we have this two-tier market in China right now. You have the real estate space where there's stresses. I think that's well known. The financials are exposed to that. There may be a shakeout to come there. Then you have the new economy, whether it's AI-related, whether it's greenification, whether it's renewable energy vehicles. There's a huge ecosystem there of some very interesting companies, and a lot of them have very good growth characteristics. So we like that area. We like the platform companies as well, the internet companies. So you do have those companies that are attractively priced, but you do have this broader macro issue that's holding back the market.
The worst over for property?
Sorry?
Is the worst over for property?
No, it's not. When you look at the measures that have come through from the leadership, they're really addressing the demand picture. So they're making it easier for people to buy property. They're making it easier for people to get mortgages, get second properties. But the structural issue is liquidity. So when you look at the developers' balance sheets, they don't have the liquidity to complete projects. And if they don't have that capacity available, that's bad news for prices, that's bad news for confidence. So the measures have really been focused on demand, not liquidity, and that needs to change. So confidence is not there and will take some time to come back.